Hi there, welcome to Kneppy Invest. In this Appendix 4C September quarter video, I'll be taking a look at a company I really haven't gone into too much depth in the past, and I'm not sure why, because Dropsuite, the company I'll be focusing on this video, is operational cash flow positive in the last quarter, is growing the annual recurring revenue at a fairly good rate, and those are two things I do look for within this space. So maybe I'm going to have to take a bit of a closer look at a Dropsuite. So before we get into their quarter results, just a few facts in regards to this company. Dropsuite is all about data protection, in particular email backup, email archiving, website backup, and recovering of your important data. Now, I have no need for Dropsuite and the products they do have, but it seems like with the growth in this business, there's a lot of companies out there that really do need Dropsuite and what they're offering. They've been in existence for 10 years, founded in 2011, and they listed on the ASX in December 2016. It was a backdoor listing via Excalibur Mining, and that mining company had been on the ASX for about 33 years. They had changed their names a lot. Weren't really successful, hence they backdoored into another company. And originally they listed as Gold Quest in 1983. The CEO of Dropsuite is Sharif El Ansari. He has a 5% holding in this company, so a little bit of skin in the game there. And the major shareholder of Dropsuite is Topline Capital Management. Actually, not heard of that fund manager before. They have a 17% stake. Now, the market cap of Dropsuite is $160 million. That's at 24 cents. And perhaps that might be one of the reasons why I've held myself back from researching this company a little bit more. But it does seem like this company's, when we look at the share price, has been slowly going up through time. Cash receipts have been slowly going up through time. So I should be taking more of a cue just by looking at the share price increasing and the cash receipts is increasing, and maybe not focusing on the market right now. And the ticker code of Dropsuite is DSE. Dropsuite financial year coincides with the calendar year, so they're still in financial year 21. A lot of other companies on the ASX have started financial year 22. So in this slide, what I'm going to do is compare their half-year numbers that they did release in August of 2020 and just compare it to their financial year 20 numbers that they did release in February. And more than likely, we will see revenue grow. You can see financial year 20 revenue was 7 million and the half year numbers were 4.9 million. Gross margins roughly the same from last year, around 69 to 68%. And Dropsuite is almost operational cash flow positive and almost profitable for the half year. We'll say break even right now just based off those numbers. So barely operational cash flow negative and barely unprofitable. A net cash of $2 million. They did do a capital raising since the end of the half year, so that net cash has increased quite considerably in the past few months. And the most important thing here is the annual recurring revenue. We want to see that increasing and increasing at a good rate. At the end of the financial year 2020, they had $8.5 million of annual recurring revenue, and that increased to $11 million at the end of the half year. And we'll be able to see what the annual recurring revenue is at the end of the quarter. I'll show you that in a few slides from now. When you calculate the price to annual recurring revenue, I like to see a number roughly around 10. That's the first number I like to see there. And then I adjust that number based off the growth rate of annual recurring revenue. And for Dropsuite, we get 14.5. So the market is expecting this company to grow at a pretty good rate moving forward. That's why there's a little bit of a premium to Dropsuite right now. And that's understandable because we are seeing annual recurring revenue grow at a fairly good rate quarter on quarter. You'll be able to understand that when we look at that number, when I'll show you the September quarter results later in this video. Before we have a look at the most recent quarter report, the September 21 cash flow statement, I just want to go back 1 year ago just to see how this company has progressed over the past year. I want to see some growth here. Receipts to customers, $1.7 million 1 year ago, and they were slightly operational cash flow negative, almost neutral, I call that. So only operational cash flow negative by 125,000. So this company had already reached or was close to reaching a fairly important inflection point, and that is being operational cash flow positive. Because they're not burning a lot of cash in operations and they don't use a lot of money in financing and investing activities, the cash on hand did not fall all that much in this quarter. In fact, it only fell by that cash flow out of operations from 3 million to 2.9 million. Now let's have a look at the September 21 quarter report and see how things or business has progressed in the past year. Receipts have grown from 1.6 or 1.7 million to 2.9 million. Really good growth in receipts. Now, costs have also increased, but costs have not increased as quick as receipts, which means this company has gone from operational cash flow negative by a small amount to operational cash flow positive by a small amount, but it is positive. Dropsuite also did a significant capital raising, which increased the cash on hand from 2.4 million to 21.4 million. I'm not sure why they did that capital raising. Maybe it's just because they have some possible acquisitions in mind, or they're going to increase their research and development, increase their advertising and marketing. I'm not sure. Haven't really looked at that announcement, that capital raising, but more than likely management do have some ideas about how they're going to use that cash moving forward. And most importantly, how has annual recurring revenue increased in the past quarter? And we have seen it increase at an even quicker rate than what we've seen in the past, increasing from 11 million to 13.1 million, which more than likely means that cash receipts will start to increase from here on in as well. And if they don't increase their costs all that much, Dropsuite could increase their operational cash flow over the next few quarters. The one thing that holding me back from actually thinking that will be true is just the capital raising. And if they are thinking of increasing their spending, and that's one of the reasons they did the capital raising, we might see Dropsuite go back to being operational cash flow negative in the future. One thing I really like to see for these companies that do release Appendix 4Cs, in fact, I like to look at receipts history or revenue history for all companies, because I do like to see receipts or revenue grow through time. It's one of the most important things I do look for in a company, because if a company can't grow their receipts or revenue, then how are they going to grow their profits in the future unless they cut costs? But cutting costs is not something a company can do over the long term. So you need to see receipts and revenue grow through time. And for Dropsuite, they've definitely done that since they backdoored onto the ASX way back in 2016. In fact, they've grown receipts from 340,000 to 2.9 million. There was a period of time here where receipts just went sideways, and that was from the June quarter 2018 to the March quarter 2020. Receipts were around about 1.1 to 1.2 million. But since the March quarter of 2020, we've seen receipts start to grow at a quicker rate for Dropsuite, increasing from 1.2 million to 2.9 million. And with the knowledge that annual recurring revenue has started to accelerate, there is a chance we might see receipts actually start to accelerate with that as well. And if you do actually calculate the growth rate in receipts since they backdoored, we get a number of 12.6% per quarter. That's a very respectable growth in receipts over the past 5 years. Now onto the charts for Dropsuite. Taking a look at the sentiment in the company share price right now. And first we'll have a look at the weekly chart, going back to when they listed or backdoored onto the ASX. There was a little bit of excitement over the first few months. In fact, the share price rose from about 3-4 cents all the way to a high of 30 cents in a fairly short period of time. But that interest or that hype waned away fairly quickly, and the share price fell all the way back to 2.5 cents. And this does seem like that 2.5 cents was a good level of support, because it did hit it in April 2018, and then a bit of hype came back into Dropsuite, and we saw the share price go from 2.5 cents to 15 cents in a short period of time, and then that hype again fell away, and there was a couple of weeks here where the share price fell from 12.5 cents all the way down to about 4 cents. So there must have been some bad news there, and then the share price fell back to 2.5 cents, and that level, fairly strong level of support, so that would have been good buying if I was following this company at that point in time. But remember, during that period, cash receipts were not increasing, they were flat. So the market was not excited around this company, and more than likely, when I had a look at Dropsuite, I was just not excited with the lack of growth in cash receipts at that point in time, and that's why the share price really got down to that low of 2.5 cents. But there was a bit of a breakout with Dropsuite around about April or May of last year, just after the COVID-19 financial panic, and coinciding when we started to see receipts grow for this company, and the share price has increased from around 5 cents to a current share price of between about 22 and 25 cents. And we're almost at, won't say an all-time high for Dropsuite, because we did see the share price get up to 30 cents for a brief period just after they backdoored, but the share price is definitely moving up in the right direction. Definitely some positive sentiment in regards to this company. The only thing is we aren't seeing any big volume coming into Dropsuite's trading, and that's the one thing that is holding me back, is just the lack of volume, which is telling me there's not a lot of interest in fund managers around this company. And to really drive the share price higher, we need to see fund managers get more and more interested in Dropsuite. And finally, as we take a look at Dropsuite's daily chart, going back almost 1 year, and the share price of this company has almost doubled, actually it's more than doubled in the past year, increasing from about 10 or 11 cents to a current share price of around 23, 24 cents. So sentiment is positive around this company. And as I mentioned in the previous slide, the one thing I just don't see with Dropsuite is increasing volume. And if I do start to see that, particularly if it coincides with some positive news, I'd get a little bit more excited about this company. So there are a lot of things to like about Dropsuite right now, in particular how the business is performing and the growth rate in annual recurring revenue. We're not exactly seeing that translate to the share price, just looking at the daily chart, but the share price has doubled in the past year, and possibly because the share price seems to be going sideways right now, it just could be taking a breather before we see the next uplift in the share price, the return to the uptrend, and that could happen at any time, but I would like to see it coincide with some good positive financial news from the company. That's all I have for this Appendix 4C September quarter video for Dropsuite. Hope you've enjoyed this video. If you know a lot about this company and you'd like to share why you might like this company, why you might hate this company, I'd love to hear your thoughts on Dropsuite, because I might be doing a little bit more research on this company simply because of the growth in their annual recurring revenue. Cash receipts are growing at a nice consistent rate over the past 18 months. And if that can continue and they don't really increase their costs too much, this company is operational cash flow positive. If they remain operational cash flow positive, there's a lot to like about this company right now. So if you do want to leave any of your thoughts, any questions, leave in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.